If the market's in a downtrend, but the candles that I'm looking at right now are indicating over the next 30 pips, it's gonna push up, I'm gonna buy. If this was, let's say, London open right here, and we've got one 15-minute candle come in, if I see levels all the way over here in the London session yesterday, it doesn't mean much to me. But now that it's flipping back in the direction of the breakout, it's flipped red, I'm gonna enter a sell position here. My stop loss is gonna go above the current candle wick, and there we go, there's full TP hit.
And are you only trading the breakouts of the resistance supports, or do you ever trade the trend in between?
A lot of the times what you're gonna see is...
We are here with Daniel Holmes today, and today we're gonna be talking about the Epstein files.
Nice.
What's going on, everybody? Welcome back to another episode of Strategyz. Today we are featuring Daniel Holmes, who has been trading in the markets for 5+ years, and he's been getting consistent payouts every single month. This past November, he's received over 100K in payouts. Daniel, welcome to the show.
Thanks for having me, brother. I'm excited to break everything down here for everyone. And just to give a bit more context, because I know in the trading industry, people kind of say anything they want. Yeah, I made $1 million, all good. But I've got it all over my YouTube channel. November, did 100K with Top Step. And not only that, Top Step actually moved me to a live account, which is something they only do to 98 out of 100,000 traders. So a bit more proof there that, you know, what we're going to be talking about today does work, and I'm an actual trader.
And you are a price action trader. What is your price action based upon?
So yeah, price action is just a way to kind of describe the way in which I read the market. Everyone has their own religion, right? When they look at the market, some people use indicators, some people use fundamentals. I just read candlesticks, and it's not even so much market structure. It is specifically candlesticks. Yes, candlesticks in conjunction with the ones before it to maybe build a bit of a bias, but I focus more on the individual, what I'm seeing right now, as opposed to the overall market structure. Because here's the thing, if the market's in a downtrend, but the candles that I'm looking at right now are indicating over the next 30 pips, it's gonna push up, I'm gonna buy. Right, so I'm gonna discredit what I'm seeing in the market structure and focus on what I'm seeing right now. So yeah, we can go into detail and all that for sure.
Yeah, and what's your religious instrument of choice?
Gold.
Why gold?
Volatility, right? There's volume in the market. So we've got the three main sessions, Asia, London, and New York. High volume times, and with gold, they all move really nicely. Especially as me as a price action trader, a breakout trader, which we're gonna go into detail on that today, I need volume in the market. If there's no volume in the market, I'm gonna lose the trade.
And which sessions have been the favorite for you?
Well, I trade live London basically every day, but in 2025, London's been dog shit. Asia has been the one for gold.
Asia?
Yeah, Asia's, like a lot of people think, man, Asia, no volume, but this year in 2025, anyone that's a gold trader knows that Asia's been out of control this year. So with that being said, they're all good.
One of the biggest problems we see with traders isn't strategy, it's execution issues caused by poor broker conditions. That's why we partnered with Vantage. They're a globally regulated broker with over 10 years in the market, and more importantly, they offer the kind of trading conditions serious traders actually need. With Vantage, you get consistently low spreads, fast execution, no deposit or withdrawal fees, and access to platforms like TradingView, MT4, and MT5. Whether you're trading Forex, indices, commodities, or crypto CFDs, the environment is built for execution, not friction. We've secured an exclusive deal for those watching right now. If you sign up and deposit with Vantage, using code WAYON50, you'll get a 50% deposit bonus. You can find the links and details in the description below. Now, let's get back to the episode. Let's dive into your strategy now. Where do you think is the best place to start?
Support and resistance. So the entirety of the strategy is based around support and resistance. I actually don't like saying support and resistance because it sounds like outdated. I just say key areas where the market's respecting. So support and resistance, or how I like to call it, is just key areas where the market respects. But if we break it down in the most simple form, we've got two levels here. The bottom is always support. The top is always resistance. Now, as markets move within these levels, it's going to come up to what I would consider resistance level. And I'll explain what that means here in a second. And it's going to have some sort of reaction off it, right? And bounce away. Now, I know that for whatever reason, the market had a reaction here. And I keep a note of that. Cool. As it comes down to here, I know the market had a reaction down here as well. So there's a probability that price is going to react off there again. And that's where my edge comes into the market. But let's say it doesn't, it does, and it comes start moving back up to this resistance point here. Now this is where it gets interesting, because you're gonna ask yourself, why does it have a reaction here? It's almost like memory is stored there, like buyers and sellers in the market, and all the participants have noticed that for whatever reason, at this level, price rejected. So as we get back up here and the buyers and the sellers are in the market watching this, who's gonna take over? Is price gonna react again? or a buyer is going to take over and push it through that respected level. And that tug of war that happens right at this moment is where my edge comes in the market. And based on candlestick structure, I can define whether I think it's going to push through or not.
And for your resistance and support levels, I know some traders use wicks, some traders utilize candle bodies. What do you like to utilize for your support and resistance?
Okay, so let's say we've got a level like this. You can say there's a big candle wick at the top there. There's another small one there, but the candle bodies are just below that respected level. The best way for me to describe how to define where your support and resistance level is, I go to the 15-minute time frame. That's the lowest time frame I'll go to because I think that's a time frame where price respects, but it doesn't fully respect. If I go to the 5-minute time frame, price will be very disrespectful to that. If I go to the 1-minute time frame, it almost means nothing. And as you work your way up, more and more respect is going to be held on those levels. But for me, I base my support and resistance off the 15-minute. Now, I don't put it there at the top of the wick for a resistance level. There's nothing there for me. Yes, there's structure on the lower time frames, but like I said before, those time frames don't matter. I don't put it at the top of the bodies, and I'll explain why in a second. And I don't put it in the middle. I put it somewhere in between the middle and the bottom of the bodies, which is right there. My thesis and idea on this is, if price starts to work its way back up and break above like that, it's engulfed the bodies enough for me to show strength in the market and a higher probability of a continuation up. If it came up and just kind of engulfed there just above the bodies, I'd be like, man, it's just not it. There's not enough strength. The idea to catch breakouts is you want to see actual strength in the market for you to decide, man, this is breaking out. On the extreme opposite end, you can get a candle that comes all the way up and it engulfs all the way up like this. Now for me, this is going to be tough. It could be looked at as a bit overextended by this point. You know, there's a host of issues that can happen with that as well, which we could potentially get into today.
And you say that you're drawing your key levels on the 15 minutes. Are you using higher time frame key levels as well?
No, I'm not. I'm using higher time frame to kind of keep an eye on the overall structure. But in terms of being like, hey man, this is the level that I'm waiting for the market to break out of, it's always a 15-minute.
And how far do you look back when it comes to drawing your supports and resistance?
The immediate left. So the immediate candles during the session I trade. Like I said at the start of this, like I pay attention to the high volume time. So if this was, let's say London Open right here, and we've got one 15-minute candle come in during that London Open session. If I see levels all the way over here in the London session yesterday, it doesn't mean much to me. I'm paying attention to what's happening right now, and right now I'm getting a candle breakout, and that's what I'm participating in. At the start of this whole video, I said, I'm interested in market structure, but I'm more interested in current candle structure. And that's, it's a good question you asked right now. This is the perfect time to describe that, which is I'm paying attention to what's happening right now.
And are you only trading the breakouts of the resistance supports, or do you ever trade the trend in between?
A lot of the times what you're going to see is, the market coming down, and you're going to get something like this where you get minor support or resistance within this range. And you go, okay, man, I could get a breakout of this level. Daniel talked about breakouts and shit like that. I could get a breakout right here and then participate a minor breakout within a range like this. And yes, you can, but from the statistics, like from the data that I've collected, it's actually a much lower probability. And we're trading the game of probabilities. I don't really like that.
And you would say majority of your successful trades come from continuation patterns, not reversal.
The way that I would think about a continuation would be, let's say it came up like this, and this is some sort of pullback, and I'm anticipating a continuation in the trend. Yes, that's a higher probability, but what I've also found is the market very rarely gives you what you want. It'll give you a bit of what you want, and then you're gonna be like, man, okay, I've got to make a decision here. I've got XYZ in my favor, but I've got LGBT against me. And it's like, you've got to make a decision on like, man, do I pull the trigger or not?
Yeah.
So yeah, it's very rare that you get everything in your favor.
And are these breakouts your only type of setup that you're trading? Because from what I look at, this is mainly trading continuations because you're waiting for a break of this key level and you're trading with the trend.
Yeah. In short, what we're going to be focused on today is breakouts. My strategy specifically, I have two models. I call it type 1, type 2. Type 1 is essentially a breakout, and type 2 is identifying these respected levels and getting a reaction off. Right? So in this case, I'll be selling down back in this range. Today, just for the purposes of the video, we'll focus on just the type 1, which is, like I said, the breakout.
Let's just say price is moving towards one of these key levels like this area of resistance. What are your confirmations of the candlesticks for your entries?
Yep, no, that's really important. So it's all well and good that we're talking about this now and, talking about ideal scenarios, but the reality is it's never that ideal. Like I said at the start, your ability to read candlestick bodies and candlestick structure is really important. So let me break down something here. Look, these are like 4 of the most common candles that you'll see in the market, right? This would be considered the most ideal candle that you can see in the market. You've got a strong body, the wicks aren't bigger than the bodies, and they're pretty even on both ends. Now, if this was a bearish candle, I'd say, man, that's a great sign. Like, especially if that was breaking a key level, right? I'd say that's a great sign. That's a strong body. The wicks aren't too crazy. Really good stuff here. This candle here, there's almost no wick on each end, showing me that like, if it opened up here, all it did was move up. It didn't even create any range up here. So a really strong candle, but it's a bit like, price hasn't been tested in any area. So I'm a bit skeptical on what could happen next. Obviously here, if this was a bearish candle, opened up here, came all the way down here, but closed here. So massive rejection. And then this candle is one of the ones that you've got to be most cautious of, which is, it's a major tug of war. Buyers and sellers, no one's in control here. And what I see beginners making the biggest mistake is trading when there's candles that look like this or look like this, right? Doji candles.
That break after this key level of resistance.
Just anywhere, like anywhere around your entry point, it just shows indecision. When we're taking entries, we want to have clear confirmation that someone's in control here. Either buyers or sellers are in control. Big body candles. Here, it's a tug of war still. Honestly, it's a bit unpredictable. If I'm looking at this and say, cool, well, what do I want to see around my key area that I'm looking to take a breakout trade from? It's going to be really like this. You're going to want to see just something like that, like a big, strong body.
You want to see buyers in control.
Yeah.
Resistance, and then of course you want to see sellers in control with support.
Exactly. As opposed to if I got something like this at my breakout point, I'm like, I don't like that at all. Where that was one of the biggest mistakes I used to make. If it closed above this level, regardless, I'm in. Right now, I'm like, oh no, I need to see specific things. I need to read what the candle's trying to tell me.
And you mentioned close. There are people as soon as it breaks this level, they enter. What are your thoughts about having an order placed on right as soon as it breaks, as soon as it enters the level, you have your trade placed versus it closing? Yeah. Why is closing so important?
Yeah, it's a good question. There's a time and a place for impulse kind of, if it starts to move, you can take that impulse entry, but it's quite an advanced concept. The conditions have to be very right for it. But the most safest way is actually waiting for that candle closure, because the candle closure is basically saying that buyers are holding price here. Sellers haven't been able to push it back into the range. Because you tell me, how many times have you seen a candle like above a respected level? There's about a minute on the clock, and then what happens? It drops back in last minute and fucking closes in the range. And you're like, lucky I didn't, enter. You want to see buyers holding it above there. And what does that look like? It looks like a candle actually closing above. A lot of guys that see me take breakout trades are like, man, just take the trade. You're gonna miss it. I'm like, okay, if I miss this trade if this keeps moving up, whoop-de-doo. I care about the next 1,000 trades. Because I know over 1,000 trades, this comes back more than it continues up. What do I need to see for probabilities in my favor? I need to see closures.
For traders that do want to use this strategy or already using this strategy, breakouts of support and resistance, what do you think is another common mistake they make? Yeah,
good question. The biggest one is impatience. The second biggest one is marking the levels incorrectly. So what I'll do is I'll show up for, let's say London, and I'll give myself, maybe a 1.5 to 3 hour window. And I'll sit there, I'll mark my levels, and I'll wait for price to get to one of those levels. Now, if I don't see that within that time frame, what do you think a beginner trader starts to feel? Oh man, I've been sitting here for 3 hours. I deserve a trade.
Let me take this setup.
Yeah, let me take this. Like, we start to feel a sense of entitlement. Like, I've sat here for hours. I should be able to trade. Like, just remember, you're not showing up to the screen to trade. You're showing up to just see if the setup comes to you. When you show up with the intent to trade, that's when you start to force shit.
So you're saying you spend about 1.5 to 3 hours on the chart. Are you sticking to that plan daily? For example, I know you said recently you've been liking Asia session, but are you doing 1.5 to 3 hours on Asia, 1.5 to 3 hours on London, 1.5 to 3 hours on New York? Or are you just sticking to one session, 3 hours, that's it?
For myself now, I do 2 sessions. I do London and New York. Now, the first 2 to 3 years of my trading, I only did London. I became a profitable trader trading one session within that time window. Now that I have a bit more self-control, because I tell guys, man, be careful. If you're gonna trade London, or you go, oh man, I'm also gonna trade New York, or you take an L in London, most guys are gonna come into New York with a vengeance. Bad way to go. So as you develop as a trader, you can control your emotions better. then it's not a bad idea to, do multiple sessions.
And what is your risk management plan for how many trades you're taking a day? Is it 2 trades and you're done? 3 trades you're done? Whether they're wins or losses?
Yeah.
How are you kind of approaching that?
I say 3 and done, but
3 and done.
2 L's and done.
2 L's and done.
Yeah. So if I show up, the first 2 trades I take for the day are 2 losses, I'm done. And I only say that, and again, I mentor many students. I've seen it over and over again. You don't think straight after 2 L's. You don't. So the best thing to do is just to walk away and come back tomorrow with a fresh mind.
And do you think it's more valid to base your risk management off the amount of trades taken or the amount of money you made or lost?
Yeah, I'd say trades taken, because psychologically, the amount of emotion, and it doesn't seem like much on the surface, but the amount of emotion invested in order to take a trade is what I'm really basing it on. Money aside, for me, it's trades taken.
Yeah, as many people say too, like humans can only make 1 to 2 really good emotional decisions per day.
Yeah, it doesn't seem like it, but you can exit like a trading session and feel like drained. I'm like, I was just looking at a screen. Like, why am I so drained? But it's quite psychologically taxing.
So Danny, you've explained a lot of great things about your strategy so far. I'm super excited to get into an actual trade breakdown to explore the in-depths of how you enter, how you place your SL, how you place your TP. But before we get onto the actual charts, can you show us just kind of how you do your entries on this whiteboard?
Like I mentioned, we're waiting for price to get to one of these key levels. Now in this case, let's say we're approaching that resistance level and had a reaction off. Now I'm going to be looking at candles to start to develop, specific types of candles. And let's say we get something like this. This is a high volume time. We can say that it's maybe New York Open. We've got something like this on the 15-minute time frame, and boom, the next candle comes up, 15-minute time frame, and smashes through this key level. The candle has closed. We have a breakout. Now, again, this is the most ideal scenario, and I'm gonna break it down here. What do we do next? Do I wait for the next candle to open up and just click buy and hope that it pushes up? The very next thing you wanna do in this scenario is to wait for that next candle to open up, and it might fluctuate a bit. It might push up, and you go, oh man, it's gonna leave and do whatever. But the best thing is just to let it breathe for a second. I always say, let it get out of the first 1 minute of that new open candle here. So let's say 1 minute's gone by, and the thing that I'm actually looking for is for it to push back down into the range. So at this point, it's gonna look something like this. And most guys that took buys here are getting stopped out, and most impatient people are sad, feeling that they missed out on the trade. But the professionals are just kind of waiting, because the next thing, if you're patient enough and the conditions are right, which is gonna happen, is this is gonna start to reject back up. And that once bearish candle is now looking bullish, leaving a retest, a rejection, and starting to push up here. Now, the reason we want this is because this shows me that sellers tried to push the market back into the range, but buyers said, no, bro, we're not having any of that shit, and pushed it back up, which is exactly what we want if we're looking for a breakout. We want to see that retest, a failed attempt to push back into the range, and then buyers to push price back up. Now, in an ideal scenario, the high of the previous 15-minute candle is where my buy stop is sitting. So I've placed an order there. If the market starts to break the high of the previous candle after the breakout in this scenario that I'm drawing up here, after a retest, there's a high probability that we're gonna get a continuation up for at least 30 pips. So let's say the market starts to push up, I get triggered in, bing, your boy's triggered in. The very first thing I'm doing is dragging my stop loss back in the range underneath the current candle wick, SL. Because if price starts to push back down and break the low of its own wick, or break the low of its own low, then I'm just wrong. It already did that. Why is it coming back down there? So my stop loss is here. That's the safest spot for it. My take profit, I'm gonna drag up for a 1-to-1. So meaning I'm risking $100 to make $100. But what I actually like to do here is if price starts to move up, I'm not cutting my whole position here. I'm actually only cutting 80% of the position. Then I'm gonna move my stop loss that was once underneath the wick back up to my entry point. Now I'm in a break-even trade. I've secured 80% of the position, so I've got $80 in my pocket now. Even if it comes back down and hits my break-even, I'm safe. I've still secured $80. Instead of my take profit being here, I'm gonna drag it up another 30 pips or so and see if I can let this trade run even further. If I did leave it there, what would have been a $100 win, instead now that I've brought it up to there, is probably gonna be like 130. So I'm making more from the trade. I'm taking profits off the table sooner, which puts me in a risk-free position. From my experience and the data that I've collected and the profits that I've made, this is the best way to approach taking breakout trades.
It really seems like you're doing everything on the 15-minute. Why don't you ever refine your entries on the lower time frames?
It's just the strength of the confirmation. I'm always looking for candle confirmation. The higher the time frame, the stronger the confirmation. Let's have a look at this. If this breakout like this was a 30-minute candle, even better, right? If it was a 1 hour, bruh, I'm going full margin. So the higher the time frame, the better. Yeah.
Great advice.
Yeah.
All right, well, yeah, let's go to the charts and actually break down the strategy in depth. The most dangerous thing in trading isn't losing money. It's thinking you have an edge when you don't. Pip Labs lets you backtest and replay markets, including a prop firm simulator, so you can test execution, risk, and decision-making before buying your first challenge or risking real capital. And we've secured an exclusive 15% discount that you can't find anywhere else. Use code Wayond. You'll find the links and details in the description. All right, guys, we're about to hop back on the charts. Unfortunately, we had to film this session on a different day. Dana got a little bit sick, so his voice is a little bit under the weather. But yeah, Dana, let's hop on the charts and let's see what you got.
I guess in this next segment, we're going to go through a live simulation session. So this is some trades that I had taken and obviously recorded the screen throughout that process. And I'm just going to talk through it now. So in this chart here, you can see we're on the 15-minute time frame. This blue line here is representing my support level. And like we spoke about earlier in the videos, we're waiting for a candle to break below that support level, retest, and then I can look at selling the market here. So let's press play here and watch how things pan out and talk about the mindset I had whilst going through this simulation session here. So as we're starting to break here, a lot of FOMO traders, a lot of the times will click sell here. They don't understand the importance of waiting for candle closures. So I'm gonna wait here. I'm gonna let it push down, let it dance around a little bit. Perfect. So there's a closure below that key level there. Now the next step is I really want to see a retest. So I need to see a retest in order for me to get interested in this sell. So it's open up here and it's all those guys that took impulse sells there now got stopped out. Right? That's the importance of waiting for candle closures. While I'm waiting here, I'm waiting for this to happen. I needed this to happen actually. So now that it's flipping back in the direction of the breakout, it's flipped red. I'm going to enter a sell position here. My stop loss is going to go above the current candle wick. Take profit's going to move down to around the 1 to 1.5 risk to reward, and then just let the rest play out. So there's a low broken there. And my job now is just to sit on my hands and let the trade either win or lose. And there we go, there's full TP hit. And again, the premise is the break, the retest, entered on the flip, and target was hit.
So you'll never enter a trade unless it retest.
It has to retest. There's maybe like a 3% chance that I'll take a trade without that retest, but the market conditions have to be very specific for me to be interested in that.
And do you ever do this on the 5 minutes?
Never the 5 minute. The 15-minute is the lowest level I'll ever go to. Yeah, the 5 minutes just too noisy for me and it's just unnecessary, to be honest.
Do you find yourself ever swinging though, like on the hourly 4 hours?
Nah.
No.
So this is the thing, like sometimes there's a tendency to want to swing and things like that, but then I have to realize that I'm playing a different game then. Right, I'm believing in a different religion. It's not something I've got data on to prove that it's profitable for me. All right, so again, we've got the 15-minute time frame, a lot of chop here. I'm gonna place a resistance level here and the same deal. I'm gonna be waiting for a 15-minute candle to push above, close, and engulf that range. Once it does, I need the retest and the continuation. So there's the closure, there's the retest. If I can break the high of the breakout candle, I'm going to look at entering a buy position. We've got clean traffic to the left, and I look to fill some of this range here. Just get that. I should get a nice pop here. So there's entry at the break of the high. Stop loss goes back beneath the resistance level, and take profit can move up to again another like 1.5 risk to reward or something like that. So we should get a pop there. There's our pop, and we'll just let it play out. It's either hit full TP or not. And there's target hit.
Oh.
And that's really like the premise of the overall strategy. It's like wait for a key area to get engulfed, retested, and then continue in that direction. It's a breakout. We want to see buyers push it in that direction or sellers push in that direction once it's engulfed a lot of the chop. Honestly, man, it's that simple strategy, rinse and repeat. Yeah.
And you like taking your breakouts when you see areas of consolidation like this on the 15-minute?
Yeah, like ideally, if you get like I consider it like a fuel station, like we're just fueling up in consolidation. And then if we can break out, it's like, all right, we're off. You'll typically find like the bigger the consolidation build up, the harder it is to get like a clean setup. Typically, if it's gonna break out, the market's like, I'm out of here. But if you can, it's really high probability trades.
That is a wrap for this episode of Strategyz. If you guys did enjoy this episode, be sure to leave a like and subscribe. Also, if you want Daniel on a part 2, be sure to comment down below what you want to see and also give him a subscribe on the channel. Daniel, thank you so much for coming in.
Appreciate you, brother.
Anything for the audience?
Join my live stream every day, live trading.
Yes, sir.